So let me start all over again. Thanks to Lincoln, Sanjay, and James that are part of this class right now. It's a very short notice, but thank you for being part of it. So I'm going to share some bit of important information with you today. First of all, is self-understanding. Self-understanding can be a very, very positive factor when it comes to trading, and it can be a limiting factor when it comes to trading, right? And then you have to be able to align self-understanding with your trading method. You cannot trade like me, and I cannot trade like you. So, first of all, if you do not have a self-understanding of who you are, then irrespective of whatever method that I put on the table can be very, very challenging for you to manage, right? And everything has got to do with knowledge. First of all, knowledge is very, very essential. Knowledge is very, very key when it comes to trading. I think over the last week we were discussing, I and James, we were discussing about dollar Swiss, right? So, and there's what we call cognitive dissonance. Cognitive dissonance is when you are faced with two opposing thoughts, right? And when you're faced with two opposing thoughts as a human being, whether it's in your lifestyle or it's in your relationship or it's in anything that you do, those two opposing thoughts can be very, very challenging if you do not know how to separate it. All right, so my chart is a bit messy here. Obviously, but what I'm gonna do is I'll pull up another chart that is from a different broker. It's not gonna be that messy, so that we can go through our thoughts of what we were seeing on this particular chart. A little bit advanced, but yeah, it is essential to have a understanding of it as well. Okay, so when we look at this particular dollar Swiss chart, I will look at it from different perspective. That's the way that I normally do. It kind of gives me more clarity more than anyone else. Um, okay, so looking at this chart, we've seen a month that is almost bullish engulfing, right? And the next thing that any trader want to do is they will be thinking of, okay, I've seen a bullish engulfing. It is near a structural point, right? And the next thing a trader want to be doing is be thinking of, wow, when is it actually going to be a good time to buy, right? But there's certain information over here that you may have completely forgotten if you just focus on one particular piece of information alone, right? When you look at this chart, you have to find a starting point. You always have to find a starting point to understand where the winners are, right? And in this chart, the winners are literally the sellers, okay? Because the way the price is descending, we can say the highest point over on this chart is on this level for now, right? On this monthly piece of chart. And I want to introduce you to the importance of understanding structure. Structure can come in also different kind of ways, so you have to understand the different ways in which structures can present itself. Right. Me saying this is a rounding top, okay? And when you have a rounding top, you have a reason for price to put the pressure on the downside, okay? I don't know whether you can understand what I mean by that, but if I put this on line charts, probably it will be much more clearer. All right, so you can see the line chart is not even created in a clear manner the way that I wanted it to go, but let me show you briefly. Okay, So we're talking about so and, so if you have any question, don't hesitate to ask. We're talking about such a move that is coming up like this and find itself in a grounding manner. I mean, this the way some people see pattern is yeah, the kind of candle that is from. Meanwhile, what we are actually watching for is the money flow. Which direction is the money flowing to? It's not just about the triple top or the double top or the rounding top or whatever. What we are trying to understand is why the money flows from the bottom, which is down here, and start to go up, right? We're trying to read the investor psychology. Do they still want to go high? Are they still trying 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 to go high? Would they ever go high past this one? And then they reveal themselves the way they're gonna flush price all the way down. All right. So when we now start from the starting point, the highest point that we've seen is this high, right? And noting all this high that comes a long way before we see this move. What actually then happened is by the time we see this move, we didn't find a reason to close above this high anymore. We didn't go and touch it. So the low that created this particular high becomes very, very important, right? It's a structural point. I've taught this in any of my YouTube classes on the YouTube lesson. This low becomes very, very important. You do not want to neglect that particular low. Okay. So going forward, because that's the law that created that particular highest point that we've seen. So there is someone definitely here that has some information about the way the money is going to flow further than any other person. So that particular person was able to make that decision over there, and then price descended all the way down. All right. So this level becomes very, very important. So we are doing a little bit of an advanced understanding of how the money flows. So basically, before then, we now saw their hand in this impulsive move down, all right, on the monthly. Then we saw a bit of correction. So we have this impulsive move down, and then we saw a bit of the way that it corrected, right? And then price breaks down again impulsively, couple of correction again, and breaks down impulsively at the same time as well. All right? So if if you remember, I talked about cognitive dissonance, that when you are faced with two opposing thoughts of, am I gonna be a buyer of this or be a seller of this, right? Then you're gonna have to look at where do we actually come from? Where is the I? All right, so the I is over here. Does this I create some kind of excess, right? Which I've talked before we start to see that significant sell-off. All right, so if that I create an excess is when we have overflow. Let me show you an example of excess. So down here, we have a significant selling excess that met an aggressive buying impulse. All right. Over here, we have a bit of an excess as well. It's not just as aggressive as this one. So an excess marks the end of an auction. So when we look at this bottom right here, have we seen such an excess? Obviously, we haven't seen such an excess. So I was thinking to myself, okay, if that is the case, the price going down has signified to me that in as much as we haven't seen an excess that can tell us that this auction coming down has ended, I'm still expecting a potential retest of this move. Okay, so I was looking at that and I'm saying I'm expecting a potential retest of this. So how do I want to position myself about with my thoughts? So most probably I'm gonna look for a trade that is gonna get me into selling this from a high point of view. All right. So and the only way for me to do that is I've seen a bullish engulfing candle, and then I've seen this new month trying to push up higher. And then how do I pick a trade on a high point in a reasonable area that's going to give me a shorting opportunity that can, in fact, push itself all the way down below this low of the last 5 years? All right. So these are how I'm aligning my thoughts together. Um, Give me a second. Okay, so I'm gonna mute someone. Right. So basically, what we then do is we want to look for that particular area that will give us this sell opportunity, which I believe we found it on what's it called, on a much lower time frame. So now I've come down to the weekly. Coming down to the weekly, I'm looking at the chart and saying to myself, what is the high point on this weekly chart? Okay, so and that high point, I want to get it as close as possible to the price. I want to get as close as possible to the price. So I think one of the area that can be important, getting as close as possible to the price for this week, is gonna be this weekly high over here. Okay. Now, you know your monthly zone, and you can see that price is far away from the eye of the monthly zone. Price is literally sitting on the support of the monthly zone. So there's no need not to think of, okay, if we are sitting on a support of a higher time frame, obviously, the buyers will want to take advantage of that particular area to push the price up. That means there has been a significant sell-off over a long period of time. And then that in itself, you need to understand that if traders has been selling off over a long period of time to a particular monthly reference point, then decisions are bound to be made. The traders who are winning are sellers, right? So how do I align myself to those traders that are winning in case they want to mount further pressure to break this low? So that is one thought that is going to be lingering in your mind all along. I want to know the winning traders. I want to know where their direction is. And then I want to see how best I can align myself in that direction should in case that direction start to pick itself up. All right, so this is the high of the weekly, this is the low of the weekly, the recent high and the recent low of this particular weekly. So when you look at this, for you to trade in today, you've now set yourself some kind of range, right? This is about a 309 pips range that you are looking at. And the best trade would have been if you take a sell from this high, right? And then that's the best short trade. The best long trade would have been if you take a buy from this low. But if you do not know, you now start to use those high and those low as an area of reference. Because obviously, once the price come above here and trade above here now, then you're looking for certain things that will give you a reason for you to continue. You might be looking at your chart because this is a huge weekly reference point. And if the price find a reason to trade above here, you're going to have certain expectations. One of them is with trade above, then if we come back down to here, right, I'm expecting a potential support that will lead the price in a second, trade above. Then now I want to buy this support that will lead the price up here. All right. So the way that I said it, it was so simple, right? But how do you find yourself in a position where you can wait for this support sufficiently enough to be able to buy, right? So there are a couple of things that will line up over here, which obviously, if you are not a newbie, you know that you want to be saying that, okay, we've buy this up, then we're looking for some rejection candle, right? So that is one thought. And then you can have this thought at the back of your mind as well that we may break it a little bit and then find a reason to trade down back below it, and then price will start to rush back down. Okay, so having this thought as well is valid. The reason why this thought will be valid is you are thinking which traders are winning, and then how can I align myself in the direction of the traders that are winning. It's either I take the advantage of this sell opportunity if it presents itself, then most probably we can then push price all the way down. All right. So that is another thought in its own. So those thoughts you've had it at the back of your mind. The only thing you're waiting for is how they're gonna play out, right? So what you then do now is once you've marked up your weekly, your high or low, you still want to get a little bit closer to the price. And the only way to get closer to the price is you go to daily charts, right? So on this daily chart now, I think um, we started to look at this differently now and say to ourselves, okay, if this daily chart is presenting itself the way that it's presenting itself, how best can I get closer to price? One of the best way to get closer to price is to use a trend line. So we've marked, which means this analysis that we're doing, we've zoned it inside this particular area alone. We don't want to go further past this area over the next few weeks. What we are investigating now is we are looking at the money flow, the way we come down towards this way that we come down and we create a new low. And you can actually see that we rounded up again and then come back to this area. So we kind of create a reversal pattern, right, which is a potential head and shoulder pattern on this chart. Sorry, bear me a second. So this low,
Make I record this now, beg.
right?
There's a wedding by 10.
There's a wedding by 10.
Yeah.
When is the youth program taking place?
The youth program is here.
Why are they jamming too many things at the same time? Okay,
I'm not on the
All right. Sorry about that, guys. I think Peter is in the middle of the meeting. So we created a reversal pattern over here, right? And one thing is to understand trend change. When we created this reversal pattern, then we make a new high over here, right? This high that we made over here started from a particular low as well. So if you remember what I was talking about, cognitive dissonance, when we are faced with two opposing thoughts, how do we separate which thoughts we want to follow? So we're gonna put a little line over here that signifies where the starting point, so that at least we always know the starting point of our decision making process. So before we created this side, that comes from here, and then we got to this eye, and we can see this area clearly on daily. So the next thing we want to do is we've known our last move, right? Which shows us the strength of the buyers, right? After this potential reversal pattern, okay? So, and then now those move comes in an impulsive manner, then it's essential to understand that at the same time as well. Before we start to see this particular correction, okay? But the one key thing about this correction, which you might not be able to see clearly now, is this correction starts from this high as well. If this correction comes in an impulsive manner, then it might be signaling to us that something is especially changing, because this reversal pattern that we've seen that tells us that price is going to go up, okay, needs to continue to affirm that until we trade above here, then obviously price is not going to go up. So this will now lead us into looking at things probably on a much more smaller time frame. So the only thing that we get to see on the daily chart is we get to see clearly that we form a reversal pattern that created a new high, right? So once we have this low, we have a higher low, and then obviously we have a new high that is higher than all this area. Then the next thing that might now be possible is to be looking at price and be saying, if we come down like this and we created a lower, sorry, a higher low compared to this level of low, then most probably this upward movement may continue going up. Okay, so that is a thought at the same time as well. For us to align that thought with other things that we're doing, I will employ the use of a particular trend line right here. Right? So this trend line signifies that we are going up, right? The money flow is flowing to the upside. If we manage to breach this trend line down, then obviously most probably the money flow direction has changed. But I want you to pay attention to this trend line as well. So this is a new point, but there has been a point that we touch before we get to this new point, all right? So previously, because the first touch, the second touch actually makes a trend line, all right? So, and if you can get a first touch that is closer to the first point, then your trend line is valid. So over here, we have a valid touch over here. We still have a valid touch over here. We have a valid touch over here, which means what then happen over here is we kind of break down this trend line. And then James, you can see that we are struggling to come above it. All right, so does it mean that if I put a trend line over here, it's not valid? Well, it's still valid, but you cannot neglect the first touch, the second touch, right? If you place the trend line over here, you are over anticipating certain things, which I'm going to show you shortly, right? But let's have this two trend line like this, and have this one like that, all right? So that kind of separates the actions that are coming down from here that breaks this trend line from the action that are coming down that sits on this trend line. So now going to 4 hour, this is where I will now do a little bit of more structural touch. So on my 4 hour, I want to know where we're coming from. We're coming from this high all the way down, okay? If we're coming from this high, would I be able to confirm that this moves more or less like in an impulsive manner, like almost a straight down move, right? And then this move is a descending channel correction of this impulsive move. So now we are facing a 4 hour view of how we are actually um, flowing when it comes to the way the money is going down. So I can say to myself, this might be a little bit challenging, but when you look at this, it comes in many forms. It can be a triangle, right? I can see it as a descending channel in some manner. But all I'm trying to say is everything that happens over here is a consolidation, and its consolidations are corrective move, right? Right. So I can see it as a descending channel if I push it down here. And the good thing about a descending channel is it's a reversal pattern. So this particular corrective move should be able to reverse the price back up. But unfortunately, when we hit the eye of that descending channel or the corrective move, what we met was a rejection. And this is a sign of excess. This rejection we've seen over here, that we've had a buying excess, we are tired, right? And then we saw this rejection. And this rejection leads to another impulsive move. And when you look at this impulsive move down, you can then agree with me that the behavior that we have over here that we are seeing currently, it's not exactly that impulsive. So we have this impulsive candle and we start to see correction. So now we've break this down to a point of identifying that, okay, all right, so at the time that we got here, the money was flowing impulsively, right? Such that we can look at the whole of this movement and say, wow, are we now going to be looking at this as correction? If we do not want to accept this, right, at least we'll be able to accept this side as a correction. Is this a correction of this impulsive move, right? Or is it a correction of this larger move? All right. So the first thing is, where is our starting point before we get here? So you can easily accept that the starting point started from here, so that you don't face that two opposing um, decision of cognitive dissonance. Because, and that is why I try to break down here that, okay, the starting point initially, which is the last impulsive move, was this particular one. It created a bit of a correction right here, right? And that bit of correction gives us back another impulsive move. Okay. So we can equally say that, okay, this impulsive move kind of ended its own scenario over here, because we have this particular correction that should have led to continuation. All right. But when you look at this trend line that we have, which is the first trend line, and price is finding it difficult to go above it, right? And we saw this particular impulsive move, which created some bit of correction before going down, right? So now you can see the sign of excess on this candle, the way that we try to go up, we hit a high, and then we start to see another impulsive move down, all right? Having seen this impulsive move down, we met an excess at this bottom, which is giving us this correction now. So it is equally important for us to understand that the last move, right, which is important to us, is this move. All right. So until this move got invalidated, this is still going to be looked at as a correction. So can you see the way that we break it down? We need to know the starting point, the end point. So this is the starting point of an impulsive move. It gives us a bit of a correction that we are potentially looking for a continuation down to the downside, which we didn't see. Then we can neglect the fact that it's an impulsive move as well. Gives us its own correction, which should give us an impulsive move above here, but what we saw was a reversal. And this move happened in an impulsive manner as well, because it's not just a one candle move, right? It's almost a two candle move, but it met an excess at the top, met an excess at the bottom that ends the auction process, or the buying and selling process, and then we start to see this correction. So we ended the week on dollar Swiss as a correction, right? And this is the starting point of that particular correction on of the impulsive move on the what's it called, on the 4 hour time frame. And this is the end point, okay? And this starting point and end point becomes a good reference point. That what we want to see next is, if price manage to break above here, we want price to be able to stay above here, right? We're not going to make a selling decision until price starts to sell down back below here. All right. So come into next week, we want to be patient and see how price is going to trade, whether price is going to be able to break above here. So the moment price breaks above here now, then you don't want to be a seller. And I'll explain that in a second. When you look at the way the money flow, we have this impulsive move, right? And then we have a low right here, which is still higher than this particular low. Okay. We found ourselves in a, we found ourselves in a territory that is hanging between the balance of two daily trend line, this white lines and this white lines. They come from the daily chart. So, right when you are inside a scenario like this, you don't want to do anything. You want to see exactly what's going to happen. First of all, are we going to be able to find a reason to come above here, right? And if we come above here, we can see equally there are a couple of resistance, right? Around this area, and then be able to trade like this, be able to trade like this, and possibly fail and come down right? And when we fail and come down, obviously we're going to be coming back down here. And by the time we're coming back to this structural high here, then that will be an area to be considering a valid short. So, right. Say that again. Let's put it in much more plain sight. All right. So, right. So, contribution. If you have any contribution here, then yeah, you're free to unmute yourself. 1 second. Let me see. You're free to unmute yourself. Okay. Right.
Yeah, hello, boss.
Yeah, 1 second. I'm just gonna quickly wrap this up then. Oh, say whatever you want to say first of all, then I'll wrap this up.
Okay. All right. Thank you very much, boss.
You're welcome.
So, yeah, there's something I'm just seeing there. The channel that you drew there. The other channel from the top.
This one.
Yes, that very one. I think if we take it down, we can see a kind of breaker. If we decide to take that channel down, the line, that trend line, no, that trend line you drew.
This one.
Okay. Now, yes, no, the other one, the top one, the top
this
one.
Oh,
no.
This one.
No, the other one.
The yellow one.
Yellow one, yeah.
Yeah, the
so
yellow
you
one.
take it down. You draw the line down. Good.
Yeah.
Good.
Right.
Good. I think we'll kind of see a breakout there, then a retest,
and then a continuation. All right. So, the reason why I didn't extend this one down first of all is what purpose was it serving at that particular point in time? But if we actually going to consider it, right, I would say the best way to consider it is like this, which I haven't really checked out, but is to actually start from the top of the move, right? So in that way, we wouldn't have neglected any points whatsoever. So we would have started like this and then obviously push the price. We hit that, we come. We hit this, we come. So obviously what you're saying now is you're saying we have a breakout.
Okay.
Yeah, that would have been what you are saying in essence, that there's a breakout. All right. So when we have a breakout, we have to be able to consider what kind of breakout are we having. A breakout supposed to be an impulsive move, right? And then obviously find a retest. This, in a way, we can really call it a successful breakout if we're going to be identifying a breakout. So, I mean, if we have this move, say for example, the way we have this for our move, that particular trend line over there, and then we break out and we continue like that. Yeah, this is more than a valid. But if a breakout comes into a correction, then obviously it's not exactly a breakout. I will go through this chart in many other, what's it called as well, in many other dimensions. So the one thing that we haven't done is this, where we started from, right? We can equally see that, let's see. Give me a second. So where we started from, we started impulsively like this. We make almost a wave up like this, isn't it? And then we come down. So we can say this is 0 to 1, 1 to 2, 2 to 3, 3 to 4. Are we having a potential 4 to 5? But I was having this wave count discussion with a friend of mine as well. And then we were looking at also different kind of ways to count the wave. All right, so if this is 0 to 1 and 1 to 2, 2 to 3, so what we are trying to look at is we are looking at the market cycle, the way the investors are putting their money in this market, taking it out, the kind of fears, the kind of breeders in this market. Already we can see easily that on this particular wave, this is more or less like the beginning of the whole move. This is the innovative aspect of the move that, okay, let's see whether we can push this up. Do you believe that we are actually going to go up, and then, most probably, yeah, we may go up, but I think I'm satisfied with where we are now. Let me take some money off and see how far down we're going to go, right? So we didn't go further down. Look at where we are stopping. Another opportunity for me to buy. So we push price all the way up again. So these are the way the market goes in cycle. Sometimes it goes in that kind of cycle up to 5 waves or and in each and every one, you will have something that starts the idea of going up, right? And that is what we call the innovators. At the back of the innovators, some people will get disbelief and be like, okay, really, I don't think this is going to go up. So by the time they sell out and take out their profit and be like, okay, let's really watch whether this is going to go up, which is on this particular wave, right? Now that they've seen that this guy literally have the prowess, there's so much others at this bottom that believes in the fact that price needs to go up, right? Such that when the sell-off occur, we couldn't overwhelm those orders, right? Then the next thing is more ideas of buying start to come in. And after that, more ideas of buying, then they're going to be like, okay, now we've seen 2 levels of buying process coming in. So what we are seeing over here that hasn't taken out this low. So you now understand the reason why this area of low where we have the last buying, the last time becomes important. And then we start to see this particular sell-off. This sell-off now is now making us to understand that if we can't at least break below here and come back down to here, then the investors are still more than happy to push the price back of the 5th wave. And at the back of the 5th wave, this is a much more deeper correction, a much more deeper retracement, which it's not such a bad thing, but let's do a little bit of a feedback on this as well. So if we are putting our Fibonacci in place, the expected target, right, this area 1.61 here, 1.412 is a very good target for especially 1.272 for 78.6 rejection or so that we are having over here. All right. So having said that, let me quickly do the same thing over here. So the whole entire move comes back to 38%, but where we started the move from comes to 78.6% as well, right? So having hit that area of 78.6, we can then expect a further move up higher to 1.272. So we are seeing a little bit of a target up here, which means we would have invalidated this area. And 1.618, if this move ever continues or we see something impulsive, is coming to a very huge area over here. So which is good as well. So we are forming a potential wave cycle, right? But if we look at this wave cycle that comes down, so we have the first one over here, right? And then more or less like this first one gives us a second one, 0 to 1, 1 to 2. We can say the whole of this is 3 to 4. And then we can then say, 0 to 1. Down here we have 1 to 2, 2 to the whole of this. And then we can then say we have 3 to 4. Are we going to see a potential 4 to 5? Comes down again, and that is equally important. And the reason why I'm looking at that as being equally important, and I'm not considering this as a breakout, is this double top. You can see we come here, first of all, most probably we won't be able to see it properly on 4 hour, but let's go to 1 hour. So this double top, we come here, first of all, we saw this rejection, right? Then this rejection comes in impulsively, and you cannot ignore the fact that this move is a correction. This entire thing that we are seeing over here, the behavior of it in itself, right? We're seeing so many greens, so many reds, so many greens, so many. This is a correction, and we have another impulsive move down, okay? And then we corrected it up, and then we are looking at this now. So I was talking about this particular double top. This eye that we have over here is a form of an excess, because when we reach there, we come down significantly with rejection, okay? Although over here we make a low that is higher than this, we come back there again, right? And then we come back down with rejection. You can see they are here. You can see that the sellers are currently here for now. So our challenge that we are facing is we don't want to break. We don't want to break this low over here currently if we're going to continue to go back up, okay? We do not want to come down and break this area of low if we ever going to go back up. But where we are currently, the starting point of everything that we're doing, like I said, is very, very important. We're not going to ignore the fact that we've seen a potential double top here for now. We're not going to ignore the fact that that double top find itself correcting back down to this area, bouncing off that particular channel. And then we're not going to ignore the fact that towards the end of the closing, right, we have a correction that's now leading to a potential continuous correction. Continuous impulsive move. So for me, one thing that I want us to look at now is what kind of pattern can emerge over here. So if this is a double top, can we see a potential reason for this to give us a potential M pattern? And if that M pattern is a double top pattern, we can see a possibility for price to see come back down here. First of all, it is possible. All right. So that's one pattern that I'll be looking at in a way with the way this money is flowing. We've tested here the first time, we've tested it the second time. We come back to it the third time. If price is ever going to fall, this is the reason why I said this is not an actual breakout. It looks like one, but you know, from experience, I want my breakout to be clear, to be clean. Let me look at this chart 1 second on this as well. I want to see how the money is flowing quickly. And then we'll be able to pick up an area to look for buy or sell. Okay, so what I like to look at is I like to see my 4 hour giving me. All right, so let's look at it from monthly. Already from monthly, I know that the order is flowing down. Once my red is above the green, we are powerfully down, right, on monthly, but that will make me make decision. Weekly as well is showing me the same angle. The red is above the green, so I don't really want to do anything in long term on this chart more than be a seller, right? But daily, and then I'll be able to tell you about the fake, all the fake breakouts and everything. Daily as well is in the same manner. So overall, the direction is looking down. Nothing has really changed. So when we go to 4 hour chart now, right? The 4 hour chart is presenting certain kind of opportunity for me that I'm seeing. When we come, let me make this clear. 1 second. So there are a couple of things that we can refer to as fake breakout before a trend can change. You can see the alignment that the red is all the way on top, all the way down, right? And this alignment, when we have price breaking back above, we can have a fake breakout. All I don't want to see is, I do not want to see the green sitting above the red. Once the green is sitting above the red, I know that the buy orders are becoming stronger, right? And then obviously when price comes down here, I can see it as an initial fake breakout. I'm not going to consider this as a I'm not going to consider this sell-off as a clear sell-off. But when we come over here now, I start to see my red above the green again. So that's whatever move that happens over here. This initial sell-off is nothing. This is the sell-off that changed the hand of the game, right? And when if you can recognize this sell-off, you remember I said to you that the buying auction ended on this particular excess candle, right? This particular candle is what ended the buying auction. And we start to see this particular sell-off. And now my orders are now aligning such that my red lines or moving average are now above the green. So I can see where the pressure is. The pressure is in the hands of the sellers rather now. This move is not a fake out. This particular one is a fake out. This move is not a fake out in the sense that we've started to see the alignment of the red orders above. So I'm still expecting further push down into the new week. And then if price comes above this red now, the first time, that is a fake out. Definitely it's going to be a fake out if we can see that continuation, and then price will kind of sell off. So for me on the 4-hour chart, which is going to be the change of scenario before the daily chart can really change, I can see the essence of the sell orders are prominent in this market. Even on the 1-hour chart, the sell orders, in as much as my red, I don't go against this. If my red is above the green, then I know that the sellers are more stronger, until I started to see the red below and then the green above. Then that's when I'll be like, okay, the buyers have matured. Then obviously, let me start considering buying this opportunity. And for the wave one that we see, let me break this down a little bit for us. So the first move that we see that created the 0 to 1 was this particular one. Until when you start to look at the red, until the red aligns back up and price move above it, right? We were not able to create a sufficient significant high. When we created that particular high and price comes down over here, I'm looking at all this breakdown as a fake breakout. I know that price will still find a reason to be able to. And the reason why this is a fake breakout is because the green is still above the red. So I'll still be looking at it as a fake breakout until it tells me otherwise. So when we start to see the red now aligning on top of the green, I know fully well that, okay, something is happening. That is the time that my low now becomes important. So does it now take time for us to break this low, or we were able to break this low? If we can break this low, these are important structural point. If we can break this low, then I'll be looking at this fake breakout as a potential reason to be able to continue. But this lesson is for another day. But for now, what I can see purely now is this market is matured for a sell-off, although we are in a bit of a correction right about now, but I don't want to go against that selling for whatever reason. Right about now, we've made a side, we've made another little bit of high. The kind of pattern that we can possibly see can be an M pattern, which is a double top pattern. So this area now is becoming an area of potential. This is an area of potential resistance. If we match it backward, right, we can see a role reversal. We've come here before, right? And then we bounce off it, we break it down. Now we are coming back here. And then this area is an area of a role reversal. If you put your fib on top of it, say from here to here, 1 second. We are matching up with an area of significance 61.82, right? right around there at the same time as well, which means from, let me take this off. Okay. No problems, it's being recorded. So I'm going to be rounding off very shortly as well, but we'll catch up in the group. I need to, I've got a function today and I want to quickly go to the barbers. Got an appointment for 10 o'clock. All right, so what we are looking at now is this. I want to break down this for us. Okay. So we started from here, right? And before we start from here, we didn't get up here without this low, right? So this high and this low becomes very, very important, okay? And before we get down here, we didn't get down here without this high. Right. So that high becomes important. If the reason why it's an important high is it's a momentum high. It's an high that we created out of a huge momentum move, right? And then we come out from a momentum low, right? And then the key now is this. If this momentum high is very strong, okay, we shouldn't find a reason to be able to trade below it for any reason. But unfortunately, we breach it, okay, and then we have now, I haven't breached it. The significance of this high, the reason why this high is significant is coming from a huge structural low over here and make this particular high. The reason why this low is important more than any other low is because it's a low that creates a new high. So you want to be paying attention to those lows that created a new high. You want to be paying attention to those highs that created a new low because they are momentum level of price. They are structural part of the price. They are quite important to the price. So if this high is that important, we should be able to stay above it, right? The If we can't stay above it, then we are in big trouble, such that when we are coming back to it, right? So this is the play. The play is you want to use your knowledge to be patient, right? The knowledge that you acquire is understanding where the price starts from, right? Today, and where the price ended, which is over there, okay? And then the price comes all the way down and stop over there, right? So these three price points, this one, and this one, they are significant price level, right? The reason why they are significant price level is because they come from a low that created a new high, right? This comes from a low that created a new high over here, all right? So they becomes very, very important. So you want to be using them as a guidance on your chart and be patient around them that, okay, if we manage to trade back above this high over here now, as we've done, in the future, what I don't want to see is I want this area to remain as a level of potential support. I don't want price to start to break down below it. If price starts to break down below it, then my future trade is this, right? We've break down below it. It is now clear that we break down below it. The only thing that I need to do is be patient and see price coming back towards that particular area. And then what it's going to do for you is because you know the price level of 92.02, right? Any trade that you take around it will give you a low risk trade. We definitely give you a low risk trade. When you look at here now, when we break down, although we didn't hit the exact number over here, the psychological area. So these are all the judgments that you need to do within yourself that, okay, when we come in, I'm not going to take a trade until I see that the price is hitting it. But as soon as the price is coming closer to it, it becomes of huge interest to me, whether price is going to hit that area or not. But the moment we come down there and we didn't touch it and we start to see a rejection candle, that shows us the force or the power of this area, right? Come closer to it makes a lot of sense. All right. In all this area, maybe you might not consider a trade quickly, but these kind of things give you a bit of a patience. So you'll know that coming back down here now, we got a quick move of about, let's measure it. And this is the kind of results that they create. And this is the reason why I want you to use them in your analysis as well. So this one takes us about 31 bars. It takes us 1 day, 7 hours to create a move of about 108 pips in dollar Swiss. That is huge. That is significantly huge. All right. So going forward now, we haven't come closer to any high or low that created a new low. But what we can see is just because we rejected this area, this structural area, price is finding it difficult to go back there again, you know. And where price is coming to is a very good area that is showing us that the next pointer is to come down to this area. So which means if for any reason we break down this low in the future, your next potential future trade will be a rejection over here, right? And if we don't get that rejection, the moment we trade above it, these are the ways that you can use little things like structural points to make your trading decision. So you know this price is coming, right? If we break down below it, your next trade would have been that trade that will come and reject it, right? This area offer a very low risk trading opportunity, like I said, and then you are anticipating a price to potentially come down here. That is the way that you use structure to tell the story. But if this low, if for any reason you didn't see a rejection closer to it, just the moment you see that rejection, you just know that automatically it's a sell-off. This trade location, they are very, very important. If we can't find a rejection, which means that patience is important, then we know that if we break it and price is coming back to it, right? Over many years of making mistake of analyzing this, all these things tend to stick and they tend to become important in life. All right. So, and price is coming back down to it and you see a sign of rejection, just face the hourly charts. You'll be seeing them coming in, right? And then your next anticipation is price going up. It's as simple as that. Understand the structural points because those are the areas where the those are the beginning, right? Once you know the beginning of a reasoning, right, then you will know what that reasoning is likely going to produce. And that is my message for you this morning. It's called cognitive dissonance. When we are faced with two um, opposing thoughts, right? Am I going to be a seller? Am I going to be a buyer? Then you need to understand the beginning of the move, right? Once you understand the beginning of the move, then you highlight it. This is a momentum high. Why can't we stay above this momentum high? Because if we stay above it, then easily we can go up. But if we can't stay above it, any trade that is coming down below it will definitely give us a reason to be a seller. And that will save you a lot of bad trades. It will give you a low risk entry, right? It's just about the knowledge. And once the knowledge is there, then you can then tend to start to add this to your trading, utilize it, and it will be making a lot of difference. I hope you enjoy this session, and then I hope it will help you further. I hope you'll be able to send charts that pinpoint this area in the nearest future, and then you'll be able to make some informed decision. But this strategy requires a bit of patience because easily once you have it on your chart, all you are looking for is a point like this, right? And James, just because we couldn't come back up above here at the same time as well, and we are seeing this double top is more or less like a reversal pattern in a way, So anticipating that price is going to come down is not such a bad thing. Looking at that breakout, right? A lot of people do make mistake when it comes to breakout as well. If a breakout is coming in a correctional move in a way like this, right? You can see that uh, this is a correction, whether anybody likes it or not. You can even see it when I squeeze the chart. The move was not like this. It wasn't exactly like this. And even if we have a trend line that everybody will be looking at mostly, right? This is going to be the potential trend line. All right. So, and this is it. If you have a trend line like this first point, this second point, and you are anticipating a breakout, I know you are deadly anticipating a breakout. After the breakout, and the moves looks like a correction, right? And it does not only looks like a correction alone, it didn't take out this high. We need a breakout that's going to take out this high. Until we take out this high, then that breakout is not it's not a breakout, because you want a breakout that will show you that, okay, even if I take out this high and then I start to come down, then that will be my correction, and that correction I can say I want to take a trade near this trend line that will continue to go back up. So a lot of people are looking at this now and taking this rejection for a buy trade. So look how many times. So we had this breakout. Normally we will see a rejection, all right, that will possibly start to go back up, right? But all this that's going on inside there, it's like they're playing games. You can't see the momentum. You want this kind of momentum breakout. You want this potential correction that will lead to a continuation. Just look at the story that this is telling us. We haven't seen that. So if we haven't seen that, then it's now time for you to start thinking, what are we actually saying? Then it's now time for you to start thinking, am I understanding exactly what the structure is telling me? What kind of game is this playing with me right about now? Because you can sit down and be believing that we've seen that breakout, and eventually when price comes down, you'll be thinking, oh, why didn't I see this? All right, but we've already seen a double top in a previous area of role reversal. Over here there's a lot of sellers. You don't want to ignore that. Look at the supply zone coming back there again, coming back down there again. Which one is really going to overwhelm things? Now we are having a significant build-up of orders below this level, significant build-up of orders. You can see how we are spending significant time in taking things down. So what I'm going to do is I'm going to analyze this on market profile and then send it to the group. I want to say thank you to James. I want to say thank you to Sanjay. I want to say thank you to Grace, Go, Ofwen. I can't remember the gentleman's name, and Peter and Ninka for being part of the class. I hope you learned something beneficial, and I hope it'll be able to help you to improve the way that you see charts. Don't forget this area of role reversal is a kill zone where they will come back all the time to take the price down. And I want to say have a lovely Saturday. I'm going to be on the chat group and be updating you on my thoughts. Thank you so much, gentlemen. I'll send the recording link as well. And have a good day.